Hello, good evening. Myself, Omkar Sobalkar. We will learn today a concept of auditing, that is errors and frauds during the audit. Basically, what is meant by error? Error is simply an unintentional mistake done by anyone in the organization and which is caught by an auditor. And frauds, at another end, it is intentional mistake. You can say intentional misbehavior, misconduct done in the organization by anyone, authority, employee, director, or owner itself can be involved in the fraud. So when these errors or frauds are detected by the auditor or auditing assistants, then what are the duties of the auditor while dealing with that error or fraud, or verifying whether the error is exist, which is detected by the auditor or itself, or their assistant. And while verifying that, there are some duties of the auditor as well as the responsibility of the auditor. Then there are some circumstances or chances where or areas where the auditor can have a doubt in mind that maybe errors and frauds are there in the organization. So let us start with the duties if of the auditor if such fraud or error happens. First, we will start with errors. Auditor's duties regarding errors. First duty of the auditor regarding error is opening balances from the balance sheet of the previous year. Checking the opening balances whether they are carried forward from the previous year balance sheet, audited balance sheet, we can say audited balance sheet, and the closing balance of previous year are very well carried forward, exactly carried forward during the opening balances. That is, the opening balance sheet of the year is exact the same as the closing balance sheet of the year. First point, if there is any uncertainty, mistake, or there are no reconciliation statement is not there, especially in case of bank, that is bank closing balance and opening balance, there may be a difference due to some you can say withdrawals, or at the 31st March, at the end of the year, end of the day, maybe taken unposted check, or you can say uncleared checks, etc. Then yeah, there should have a reconciliation statement. But in other accounting heads or accounting ledger, exact balances should be carried forward from the previous year. Then check the posting into respective ledgers whether the journal entries of ledgers are posted very well in that ledger. That is, if you can say purchase account debit to creditor, then creditor account should have been credited and purchase account should have been debited. Okay. Then check the totals of subsidiary books. After all, mathematical calculations are most important in the accounting. Whether there is 10 rupee difference, that is an error, or that may be an fraud. 10 rupees, 1 rupee, anything. There is a difference, then there is chances of errors and frauds. Again, verify all the castings and carry forwards. That is, again, carry forward in the ledger, that is previous year balance. If it's there in debtors account or creditors account, bills receivable account, bills payable account, then that balance should be carried forward as per the closing balance of the previous year. Then ensure the list of debtors and creditors are tally with the ledger accounts. That is sub ledgers, that is debtors list may be there A, B, C, D, E. Then A, B, C, D, E, the total of those ledgers, sub ledgers has to be tallied with the schedule of the debtor, final schedule of the debtor, which is reflected in the balance sheet. Verify the total of the trial balance. Again, trial balance have to be tallied, that is debtor side and creditor side. If there is may difference, between debit side and credit side, then that trial balance is not authenticated at all. See where there is a misplacement or transposition of figures, that is 54 to 45, 81, 18, maybe mistake, by mistake I have written 18. No, there is no chances, or there may be chances of such errors, but auditors should not neglect those errors. That there may be figures in thousands or lakhs also. Careful scrutiny of books of accounts, that no entry has remained unposted. No entry has remained unposted means you have passed the journal entry and it remains unposted in the ledger first. Or you are not passed at all journal entry. When you have the voucher means you have the payment done to someone and you have not recorded or you have not journalized that entry. Again, there may not be posting also. So these are the errors, and the auditor should be careful while searching the books of accounts or scrutiny of the books of accounts, that where there is any entry which remained unposted. Again, auditor's duties regarding the frauds: verify the receipts. You know, the, everyone is behind the money, and when inward of money is there, then there are chances of frauds. That is intentional misconduct, misbehavior, intentional errors. It's called as frauds. Why am I calling the verify the receipts? Receipts is always incoming of the money, and that can be misled by the authority who is receiving that money. Examine the salary and wages register. Again, second point, salary and wages register means it is the expense, salary and wages are expense debited by trading and profit and loss account. Salary is paid to employees, wages paid to workers, maybe on daily basis. If there are fake workers or fake employees created by the authority who is paying the salary or who is in charge for the paying salary and wages, then there is a error or fraud. There is a fraud. It is intentional profiles created by the authority for debiting the salary and wages, and maybe that authority has the access to their profiles to withdraw those salaries and wages. For the organization, it is paid to so and so worker, but whether the worker exists in actual or not, that should be verified by the auditor. Compute the ratios. You know, debt equity ratio has to be 2 is to 1. The profit should be there. If there is loss, there are chances of frauds. Unusual items. You can say unusual items means if there is a sale of 1 crore rupees and in debit side of the profit and loss account, the sales promotion expenses are 50 lakhs. That is 50% of the turnover. There are chances of frauds of mentioning any expenses or why those expenses are created 50% of the turnover. That is called as unusual items. It is unusual circumstances. It cannot be, it may be a raw material 50%, then it is will be manageable. But sales promotion expenses, it is not acceptable by the auditor. That is called an unusual item. Disclosure in the audit report. If there are some disclosure regarding the previous year auditor of the audit report of the previous auditor, then auditor should consider those facts or those any points mentioned regarding the frauds in previous audit reports, and current year auditor should confirm that whether the frauds has been stopped or it has increased or decreased, whatever it may be. It should be evaluated by the auditor. The reporting to the central government. Again, the fraud detected by the auditor, they should be disclosed in the audit report as well as report to the central government if fraud is more than the 1 crore rupees. It is mandatory under Companies Act 2013. Verification of AOA, MOA, that is articles, and MOA, that is Memorandum of Association. The articles are the rules and regulation of the company, that is code of conduct of the company, and we should verify those rules, regulation, whether it has been followed by the employees, workers, authorities, any managers, CEO, directors, etc. And MOA, which is meant by the specifically objective clause of the company, should be verified whether the company is doing sales or turnover in the specified objective as per MOA or not. Whether it is out of the MOA, out of reach of the company, then auditor should detect or auditor should disclose in his audit report that there are chances of fraud, and the fraud is due to these violations of the clauses given in the MOA. Changes method of accounting. Again, if any changes method of accounting, there is depreciation, you may have WDV or you may have straight line method converted to WDV method in this year. Those changes should be disclosed in the audit report. This is duty if fraud is occurred. Verify the stock. Again, stock is also a very you can say interesting item for the fraud or fraud is. They are very much interested in doing or in manipulating the stock. If the stock register or stock authority is corrupt or he having intention to do fraud, then he may increase or decrease the stock as per his wish, or he may gain from it. It depends on the stock authority whether to decrease or increase the value of the stock, or to hide some stock, or to sell some stock outright without notifying or without his calculate or without his insertion in the stock register. Omission of assets and liabilities. Again, if asset is purchased by the company or any one of us, we should record it in the balance sheet. But if you omit that, then there is chances of frauds. And in case of this, auditor should notify this, disclose that such assets are purchased by the company but not disclosed in the balance sheet. Or liability as the same case. These are the duties of the fraud we have learned. So what are the responsibility? Duties means auditor should do that as he is binding to do those duties regarding errors and frauds. Responsibilities, it is a moral responsibility, it is a morality of the auditor to uh, evaluate or to disclose or to have a solution on errors and frauds. First, primary responsibilities include to verify the documents related to or primary documents of the company such as MOA, AOA. Risk of material misstatement means in audit program of the auditor, there are some risk of materiality, that is whether the element is that much important to audit or to get verified by the auditor. If your turnover is of rupees 1 crore and the expenses of rupees 100 or 200, whether such expense is necessary or whether such expenses have an impact, material impact on the investor's decision, then that is called as material item. But if in case of fraud, in case of I mentioned the 1 crore rupees turnover and 200 rupees expenses, that is immaterial, that's immaterial element, then there is no risk of such misstatement if it is there. Substantive procedures, again collecting the evidences regarding the errors and fraud whether actually exist or not. suspicion of fraud. You can say a sixth sense of the auditor regarding the fraud that is gained from his experience or gained from his interviews of employees or any inquiry from the authorities, etc. That he gets intuitions regarding the fraud. Confirmation of suspicion means from the audit evidences collected in the substantive procedures mentioned above, the auditor get confirmed on the suspicion. Dispelling the suspicion means it is disclosing in the audit report of the auditor. Withdrawal from engagements. If engagements, it is engagement of auditor with the organization. Engagement means such appointment letter or you can say appointment terms and conditions for the auditor that which area and how is to be audited by the auditor as per the given specification by the directions by the organization. If the auditor thinks he can withdraw from such engagements, if auditor is think fit for that frauds are there and auditor is not allowed to verify such area of the organization, then auditor may withdraw his engagement from that point and he can disclose such facts also in his audit report. Subsequent discovery, that is after the year and year, if any fraud detected by the auditor or by next auditor, that is in 2013 if you have done audit and in 2019 for that audit or for that year some fraud is detected, then the auditor has a responsibility to check whether the auditor has performed his duties very well or not. Again, last report to central government. Circumstances indicating errors and frauds. Many of such companies or small groups of companies have been passionately dominated by the one person or small group of person. You can say a very much family. You can say you are denoting Reliance, Tata. They are the families which have domination on their group of companies. There are chances of getting errors and frauds within those group of companies, maybe or may not be. There are chances, circumstances indicating such errors and frauds. Absence of internal control and internal check. There is no such control or there is no such hierarchy for checking the work done by the subordinates, for verifying the work done by the subordinates. Then there are 100% chances of errors and frauds. Higher rate of turnover. Turnover means incoming and outgoing of the employees of the accounts department. Specifically, accounts department, why I am saying, if accounting departments mean each and every financial transaction goes towards the accounts department for accounting the transaction. If employees of that accounting department are basically incoming and outgoing, that is appointed, again retired or fired, or resignation given by the accounts department of the employees by frequently, then there is chances of high rate of then is called as high rate of turnover. And when such sequences or events occur, then there are chances of errors and frauds because there is domination or there may be some frauds which may not be agreed to do by the employees of the account department, and those employees who are not agree, they are leaving the jobs or they are not satisfied the accountability of the organization. under the staffing of the accounts department. Understaffing means there are lack of staff. That is, if the requirement of 10 employees, then the staff is of one or two or three only. Then there are overburden on the staff of three of 10 employees. Change in auditor or lawyer of the company, frequently changing the auditor year by year. This indicates that there may be chances of errors and frauds. Inadequacy of working capital. Again, if the company is not having sound position, a sound liquidity position to manage the working capital or day-to-day activities, then there are chances of errors and frauds. Investing in the products which are slow moving or no demand. Why anyone cannot, who is a rational person, will not invest in the slow moving or they have no demand for the products. If such company or person or any organization intends to invest in this slow moving item or no demand for such items, then there is chances of errors. Why this company is investing in such useless products. Transaction with relatives. Again, if you are going to give donations or funds for the to the relatives and without any reason, any valid reason, without any transaction with the organization, then there are chances of errors and frauds. Absence of confirmation from the third parties, explanation from the management, lack of explanation from the management, which management is not supporting you for the purpose of auditing. Transaction at the year end, which affects the profit and loss. Means at the end of the year end of the 31st March, you have put in some fake entries and you have increased your profit, or you have made some wrong entries which leads to increase in expense and which leads to decrease in profit or loss maybe. Then those last moment transactions having sure shot of 100% errors or error for frauds, we can say frauds.